held by C.V.Sajan sir, expert speaker in this matter. So we all know this is a mandatory session for us. So we'll start with the session. Before move on, we'll start the session with our institute motto song. You need not stand, just place your hand on the heart. Ramesh, please go ahead with your institute motto song.
य एष सुप्तेषु जाग्रति य एष सुप्तेषु जाग्रति कामं 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 कामपुरुषो पुरुषो निर्विमाणः निर्विमाणः तदेव शुक्रं तदेव शुक्रब्रह्मा तद्ब्रह्मा तदेवामृतमुच्यते तस्मिन् लोकः सर्वे तदूनात्यपि कश्चन एतद्द्वैता 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 एतद्द्वैता.
Thank you. So let me introduce the speaker today. Sajan sir is like a practicing chartered accountant with over 3 decades of experience. He is having specialized experience in handling matters of professional misconduct from over a decade. So with this very brief introduction, I leave the floor to you, sir. So all the audience are ready from our branch. I request you to please move on with your session, sir. Thank you. Thank you very much.
Thank you. Thank you, everybody. I am reaching everyone.
Yeah, audible, sir. Audible.
Oh, thank you so much. First of all, my heartfelt thanks to the organizers of this branch for inviting and giving me an opportunity for this. 2 corrections are required before I start on. One, I am not an expert. I am just one among you. Second, very importantly, after having practiced 3 decades as a CA and have experience in all gamuts of my profession, I have surrendered my CP and no longer a practicing chartered accountant now. I'm practicing as an advocate now. So, because my full 100% time is now dedicated to professional misconduct matters, assisting chartered accountants, and it requires me to appear in courts. And because I was not having an advocate's license, I was prevented from appearing in NCLAT and all against NFRA, which constrained me to surrender my lovable COP and to absorb myself as an advocate. Just because suppose somebody is going to check my profile on the social network, and if they find that the introduction given by Mr. Jayant is not appropriate, so I thought of correcting the records, that's all. I think when you began, Jayant, you said this is a mandatory session. That is a very crucial point. This topic has been imposed by the institute to be imparted as an essential curriculum for our CP hours for, I think more than now 3 years. This is the 3rd year. That assumes the importance of the subject. The institute has felt the need of giving compulsory education to the professionals, particularly those who are in practice, because of the overwhelming importance this subject is gaining, has gained already. You are aware that the revised Code of Ethics is in force since 2020. Now nearly 3 years have passed. And text-wise, most of you must have gone through that. It's a voluminous one. Unlike the previous Code of Ethics, which was only in one textbook, now we have 3 volumes, very detailed. And that textbook, the concepts in it on one side, and the pressure on the profession from various quarters on the other side. There is an increased feeling that chartered accountancy profession is seriously criticized, and professionals at times are getting demotivated. All these matters are backgrounds. You are aware that National Financial Reporting Authority is in force since 2018, but they have come in full action for the last 2 years. Those who have taken time to visit their website must have observed that nearly 60 to 70 orders have been passed by them against chartered accountants. And the amount of punishment by way of debarment and penalties are at unheard of proportions. Why these 3 aspects? The revised ethics coming into force, institute making it mandatory, a new regulator coming very heavily on the profession. All these are connected, contextual. There is a sense of perception that quality of the profession has eroded somewhere. Or in other words, there is a huge expectation gap between what the authorities and stakeholders are understanding about the role of the profession and what the professionals are understanding about the profession. That is the expectation gap. Chartered accountants understand the work in a particular way, but the other side, the authorities, the stakeholders, they expect it in a different way. This conflict or difference in perception is what is the reason for renewed importance of imparting this education on Code of Ethics. If you have gone through the Code of Ethics books, the first volume talks about our fundamental principles of the profession. And the second volume deals with the compulsory standards that are to be followed by the profession during the discharge of the functions, and also the relevant laws and regulations that deal with professionals who fail in their duties. There are two kinds of requirements from a professional. Broadly, one, regarding the quality to be provided to their work. Second, the quality of the professional, not the work, the professional. Quality of the professional, by what I mean by that is, how good are you a person befitting yourself as a chartered accountant? Every vocation, every job demands certain standards. What do we expect when you call somebody as a teacher? For young students, a teacher is a role model whom they look up to for their lessons. So we have to have certain expectations from the teachers, his demeanor, his conduct, his values, the way he speaks, the way he deals with other people. All these things are conduct. Now, so is the case of a doctor or an advocate. And our chartered accountancy profession has one of the highest esteems and values in the society. A chartered accountant is looked up to. And he has a unique position as a professional. What is that unique position? He does his jobs in the larger public interest. In the larger public interest, not in private interest. Unlike a doctor. Doctor, when he treats, he does in the private interest of the patient. An advocate, when he does, firstly, he takes care of the client's interests. But a chartered accountant first has to take care of the public interest. If that public interest is not in conflict with the private interest of the person, that is fine. But otherwise, the expectation is that a chartered accountant does his actions in the larger public interest. Now, this is very complicated expectations. On one hand, you need to be appointed by a private person, and he has got his own expectations from you. And at the same time, he has compulsions to comply with certain laws and regulations and accounting requirements. So he engages you, but your job is to find fault with him, if at all there are any, without hurting him. So this is a very complicated job, a very nuanced job, where fine balancing of professionalism is required. That is why the fundamental principles of our profession, with which our code of ethics begins with, that detailed. There are 5 fundamental concepts. All of us know that. But imbibing them is the issue. The volume 1 in detail discusses that. Integrity is the first ever fundamental principle to be followed. It does not require much of elaboration. Your honesty, your straightforwardness, largely someone who takes so much of efforts to study, to qualify an examination, inherently has to be a straightforward, honest person. One who is crooked, dishonest, would not think of putting his time and ages to qualify as a CA. So inherently, by character, chartered accountants are supposed to be honest and straightforward, because working hard means straightforward. But there could be exceptions. What is straightforwardness? Straightforwardness in dealing with the client, transparency with which you deal. We live in a very complicated world. Different stakeholders have different interests, different pursuits, objectives. We cannot set the world right. But can you remain upright regardless of the requirements or expectations or exploitations happening around? Is it possible for you to be aloof from the attractions of vested interests? So, not only in discharging your job as a professional of attestation or other supporting services, but in our daily lives, to assist our client, we need to deal with authorities, regulators, other persons, litigants, where interaction of different interests naturally would take place. So there, we need to be very honest so that no one raises fingers on us. This is what is expectation. I would not deal more into it. The second, objectivity. Objectivity means you are approaching the job without any bias, without any conflict of interest, without being affected by undue influence. We call it independence. Independence is not only required for audits or assurance jobs. Independence is required in other actions also, because be it on a tax advisory service, or a management consulting service, or a compliance action, the impact of the actions by the client has got something to do with third parties' interest, be it government authorities, or their investors, or lenders, employees. When their interests also have to be affected because of the actions of the client, our job is to see that the client does not do something hanky-panky to the disadvantage of the other stakeholders. So an independent view on such matters also are required. So independence of an auditor and independence of the professional on the whole, both are expected from the point of objectivity. And you all know that the first volume of Code of Ethics largely deal with this subject. So I will come to that in a little detail, but let me complete the fundamentals first. Then I'll come back to deal with the objectivity part more in detail. Jayant, you can help me in one thing. If I go beyond 40 minutes on the fundamentals of these standards, you can remind me so that I can curb on that and move on the other topic, because we got a detailed point to deal with. The third point is the professional competence and due care. Now, today, profession is facing a daunting task of achieving the expected level of competence. If you see the overall scenario in the last 10 years or so, most of the laws that affect our profession undergone a lot of changes, be it company law, GST Act, and every year changes in law, income tax, and multitudes of other laws. Those changes are imminent because our country is progressing. The needs of the time is to change with the times. Catching up with those legal requirements and adjusting to the requirements of the times is a challenge. Auditing standards have taken a lot of energy and time of the profession after the company law 2013 came into being. Because until the new company law came, auditing standards were not mandatory as per the company law. You know, now we have section 143 subsection 9 and 143 subsection 10. So the implication of a requirement when it becomes legally imposed on you is humongous. Similarly, accounting standards, not only the Indian accounting standards, the ordinary, I mean, when I say Indian accounting standards, not Ind AS, but IFRS compliant Ind AS also are now in force. So, knowledge and experience on all these aspects is a real challenge. Making a checklist for the purpose of finalization is a big job. And the profession has not been able to meet this requirement on 100% manner, I would say. We have done a good job. For example, GST, the profession has taken up on its own, and we had a very smooth transition, although no one has appreciated the role played by this profession. Similarly, the compliance requirements have increased tremendously, but the profession is doing the compliance. But more than that, the expectation of the stakeholders is on the balance sheets and the audit opinions and the certifications. There have been failures. My experience is this. Unfortunately, if any of the balance sheets signed by any chartered accountant, if unfortunately is picked by an authority for the purpose of their examination, he is liable to face a disciplinary action. This is the truth of the matter. People who are not facing disciplinary actions, or people who have escaped the wrath of the authorities' actions, are those whom against or whose clients were safe or whose balance sheets were not subjected to any examination by anybody. Today's reality is, if a bank borrowing of a client is in default, it is not just seen as a commercial failure or the inability of the borrower to pay the money. On the other hand, they examine the legality of it, whether there any fraud was there, any misappropriation happened, all those angles. Once an event happens, there would be many who is hanging on to that. That is the time a chartered accountant's role is looked into. And that is the time the correctness of the balance sheet or the correctness of the audit report is examined. We all know that significant amount of advances were classified by the banks as fraudulent, and the CBI were entrusted the job of examining them. Similarly, Serious Fraud Investigation Office examined hundreds of companies who have been alleged to have siphoned off money of the public, be it real estate companies or marketing companies, money chain companies, or NBFCs. There have been certain large companies who have been running very well, but commercially they failed. IBC's proceedings were invoked. Thereafter, investigators also started examining. All these investigations, be it SFIO, be it CBI, ED, RBI, SEBI, all of them reach to the chartered accountant, because the companies that fail means the promoters vanish. They can. Chartered accountants cannot. And if examinations happen of the balance sheet, then naturally there would be a set of chartered accountants who are assisting them to teach them that these are the things that are required from a CA. And your fellow friends would help the investigating agencies to point out the errors and omissions on your part. That is the time you realize that, oh man, this was left out. It is very difficult these days to achieve an assurance job with 100% perfection. I, or anyone for that matter, with so much of experience, would commit mistake. But mistakes are not crimes. If your errors or judgments or omissions are incapable of being explained with the help of your working papers, that is the time you actually fail. I am referring to the working papers. So professional competence and due care means, to the best of your ability, you must do it. We have detailed auditing standards and other assurance standards and guidance notes available, based on which we can make processes very well in detail. Then during the process, we can create notes also of that. And about your decisions as an auditor, as a certifier, whatever basis you use, if those bases are properly documented and you are able to satisfy the authorities when they ask, how did you do this? And if you're able to say confident that, look, my job is this, I did this, and this is my view, and this is the basis of my view. But yes, this point you are talking about is a minor point which I have left out. But I am not giving 100% assurance on the audit report. On the certificate, you can't do that. But on audit reports, you can say that. But the problem today is our professionals are not able to stand before the authorities and explain this. A professional, if asked for investigation, he either becomes evasive or he gets scared. He does not have the confidence. And they raise all wrong questions. And you attempt giving answers to wrong questions rather than telling him that, sir, you are asking a wrong question. Our training and our curriculum does not teach us in detail how to communicate with authorities, how to create appropriate documentations, what should be the manner in which you must be communicating with others. This comes with your experience. This comes when you have opportunity to see your seniors doing that. During your articleship days, you don't get that opportunity at all. I did not get, no one got it. But post qualification, naturally, when you get opportunities, you learn things. But if a culture becomes like this, that a person who just qualifies in 24, 25 years believes that I can do on my own, I'm a chartered accountant now. He goes to a market without having enough experience. And as a youngster with his energy, he may be able to get clients, jobs, but he does on his own without any guidance. Then there is more chances for him to fail as compared to chances for a senior person. I'm not saying that seniors won't fail. Seniors also fail. So the system has eroded over a period of time because of multiple reasons. I'm not going to blame anybody for that matter. But unfortunately, we do not have a culture where a young chartered accountant would be motivated to join another firm to be a part of it because he expects less monetary benefits, less role, subdued role, undermining by the seniors. So youngsters would venture on their own for their self-actualization or prospering. Naturally so. But if the environment was that where youngsters would be loving to join the seniors, where they accomplish monetary and egoistic satisfactions, then they get appropriate exposure, understanding, and the quality of the job would always be better. And it would lead to bigger firms, larger networks. even after so many years. Where is 1949 and where are we now in 2024? 75 years. Still, we don't have large firms. There are 10 or 12 firms that have got about 20, 30 partners. I mean, 100 or more than 100 partners. 20, 30 partners, maybe 100 firms, but still. So the culture of maintaining quality could not be evolved because of multiple reasons. One of them is this. The professional competence and due care would happen only when people develop real competence, not a textbook knowledge. When we examine a balance sheet, if we see advances recoverable, one of the simplest examples, and the management gives an answer, it is advances recoverable. You are happy with that. You go on. After 4 years, when an investigator questions it, what was the money? Why was it given? Oh, you did not ask, why was it given? You did not collect the documents. Why was it given? You believed the management. And the investigator is saying that this was a diversion of funds. And then you struggle for the working paper. Where is my working paper? This is professional due care. The diligence that you have to apply. We can, n number of examples are there. I'm just giving one thing. Looking things at peripherally from the outside, going more into the details. Our job is perhaps not to question the wisdom of the management, how to do the business. But professional skepticism that is expected from a chartered accountant demands that you need to be vigilant about the intent of the management of the company or of the client. Is the intent holistic, sincere, complying the law? So we are a little lenient to understand more about the business. I don't know how many of us try to understand the business model of the client in detail, to find out whether anything wrong going on or not, opposed to public policy. So due care is a very, very important element. And it does not require rocket science for you to apply due care. Due care application is, the ability is within you. Every chartered accountant is competent to apply due care. We are qualified for that. We have the intellectual capacity. That is why the reason we qualified as chartered accountant. But it is not happening because of two reasons. One, there is limit for us to apply the time. If the client pays you only limited amount of money, how much time can you give on that job? In other words, low-paying clients are the problem. Why low-paying clients in the market? Because there is cutthroat competition among chartered accountants. Undercutting of fees happening. So, clients are exploiting the situation. And when there is undercutting of fees and also compromising on time to be given, quality would suffer. So it's a very vicious circle. Can an individual chartered accountant set right this? So by listening to me, what would you gain from this? It is up to you. What do you want to do in your life? I am saying from my humble experience as a professional. You can choose to create large number of clients, average fees, compromise quality, and move on. You can choose to create a standard for you, suffer in your life and career for some time, and wait for that golden day to get the impression from one or two that yes, this man has done good job. Let me call him back again. Do leave your mark on a job, create an impression, and leave that person for good, saying that I did my job, but your pay is less, man. I am going. If he is satisfied with you, he would call you. Get assignments from senior professionals. Leave a mark of quality with them, and then leave. When you are not paid properly, they would call you back. The journey is of sufferance. It doesn't give quick results. So the choice is one's. Unfortunately, we don't have time and patience for this choice, this lateral choice. Honestly, I am preaching this because I practiced it. And have been very successful. If I am sitting in front of you, there is a reason for that. And today for my clients, it doesn't make a difference whether I have the tag of an advocate or a CA. So the journey is very, very tough, but giving due care is up to you. The third, confidentiality. Fourth, confidentiality. I talked about integrity, objectivity, professional due care, and the confidentiality is fourth one. It's a very simple one. You are not supposed to be divulging details of your clients with others. That's it. You need to be very secretive about the client's details. Unless there is a compulsion from the law, and also after informing the client. That is confidentiality. Because they trust you, you have to return that. And the last is professional behavior. Professional behavior is, again, not understood by the profession well. Upholding the dignity and credibility of the profession, and not doing things that is not befitting to our profession. So the language that I used makes clear to you all that what is that professional behavior. You cannot be mean. You cannot be self-centered alone. Your selfishness shall not result in compromising on the larger interest of the profession. So don't do anything that lowers the dignity of the profession. You all are familiar with this fact. If something wrong goes in the society, suppose something goes wrong, a criminal act or a bribery act or a tax evasion act, or even a personal failure or any criminal act. If a chartered accountant is associated with that, the next day's heading would be CA found this, that. So the tag of CA comes first before the description of the crime concern. Why does that happen? Because the tag is more sacrosanct, and a person with that tag does something that means it is undesirable. The meaning of that particular heading is, if someone else had done it, it would have been all right, but this person did it. That means the gravity and the seriousness of the offense or the allegation becomes higher. This is what is the relevance of when somebody says that you have to, professional behavior is required. You can't be an ordinary. You are a different one. Your standard has to be higher than or that of a commoner. So friends, these are the basic principles that one can understand. And the text gives n number of requirements and this. I'm not going into that. To maintain ethical conduct, one doesn't have to study all those texts. Nothing. It's a matter of common sense. It's a matter of inculcating this character within you. I wouldn't be doing this. I would be doing this. The do's and don'ts within the framework of these 5 principles. And the larger volumes have come up because in the earlier days, the code used to be a very concise document. By saying these 5 principles and giving 1-page explanation, it was sufficient for someone with common sense to understand it. With the changing times, people are not imbibing it. So you need to educate them with more and more and more illustrations and text and words and explanations. So it has become voluminous. However large the explanation is, the essence of it is what is important. If you can understand the spirit of the meaning, the spirit of the concept, integrity, objectivity, professional competence and due care, confidentiality, professional behavior, you don't have to read any of this. Because everything boils down to these core principles. It is within them. Now, special importance to objectivity because of its peculiar feature. As I said, objectivity is more about independence. You have to be unbiased. And this has got more significance when you do the audit jobs. Audit means assurance job. Could be audit opinion, could be a review, could be a compilation, or even could be a certification. In these areas of work, your position as an independent professional is more important as compared to the other one. Now here, how do we satisfy these independent requirements? It has got two aspects. One, independence of your mind. If mind-wise, if you are independent and you have vowed to remain independent, then all your actions would be unbiased, without being affected by any influence or without being subject to any conflict of interest. This is one aspect. But second, you must have heard that in court, in judiciary parlance, it is said, justice not only should be done, but seem to have been done. They should appear to have been delivered. In other words, appearance on the face of it, of something, also shall give the message that justice is done. So is the case with independence. Independence not only in your actions, independence in your appearance, in your position. For example, you have a financial stake in a company or a partnership firm. You are expressing an opinion on that firm or on the financial statement of the firm. You are saying that I have been very unbiased in the opinion and see whether can you find any error or omission in the balance sheet or in your report or anything. Someone sees it and they find nothing. So you have acted very independent with your mind. But appearance, you have a stake in it. When you have a stake in it, then regardless of the fact that you did your job independently, that the appearance would hold you guilty. That is the reason we have section 144 and section 141 of the Companies Act, where disqualifications are given, things that are not to be done by an auditor are given. So that means when you have those kind of stakes involved in it, don't be a shareholder in a company. And if your relative is a shareholder, let them not have more than 1 lakh rupees worth. Don't give guarantee. If your relative gives, it should not be more than 1 lakh. Don't be indebted to a company. Company owner says 1 lakh, 5 lakhs, but our institute guidelines is 1 lakh. Remember that. So 5 lakh is not a criteria. 1 lakh is a criteria. Because when we have got a stricter limit according to the institute guidelines, follow that. So these are matters that on the face of it make an opportunity for somebody to raise fingers on you. You are a party associated with the entity, and how do we expect you to be unbiased or independent? So therefore, the various threats that are faced by professionals must be factored. That is the reason the Code of Ethics have identified different threats to independence. And the code appreciates that there could be cases of threats of independence. And it does not say that if there is any threat, don't undertake the job. It is very neatly saying that then try to bring down the gravity of the risk to that level where it does not affect the independence. There are only few instances where there is threat to independence, a professional is prohibited from undertaking the job. Very few. For example, the threats that have been identified according to section 141 or 144 of the Companies Act, yes, you can't do that. Prohibitory. Other than that, the fees, the code has brought a new requirement that if you are associated with an entity as an auditor, and if it's a public interest entity, and if your fees, the firm's fees, total fees is more than 20% of the from that client, so that's a significant amount. That means you are affected by them. So therefore, you tend to be not independent, even if it's for 2 years. Then report to the institute. And in a non-public interest entity, it is 40%. Remember, it's not applicable where the total fees of the firm, gross fees is less than 20 lakh rupees. It's all for bigger firms. So small practitioners are exempt, of course. So these are certain things that require more application. But for example, in the case of the tax services that you're doing, tax return preparation, the code itself says there is no conflict of interest in that. We don't see anything. But all other activities, tax planning, calculation of DTA, DTL, or even current tax liability, advisory services, advocacy, appearing in as AR, all these actions create advocacies, threat, familiarity threat, self-review threat. You are going to examine as an auditor your own calculations. So what the court says is that if you are doing the DTA calculations or DTL calculations and giving it to a company with which they are passing the entry and you are auditing it, it is a self-review threat. Sounds funny to you? Which small company can calculate DTA or DTL for that matter? So it would be you who would be doing it. So we are facing the threat. In this situation, the institute's code is not saying that don't do the job at all, but lower the threat. Means get it examined for somebody else. Or if it's possible to get it done from elsewhere, it is good. Now, theoretically, they all sound very good. Suppose somebody who wants to exploit a situation or to take revenge, we can create a situation like this. Yes, I can see, imagine about a former accounts manager creating a leaf and saying that, look, DTA calculations were given by him, signed by him, I did it, and then they did it. It's a self-review threat. He left the company, he filed a complaint, you are after that. So leaving evidences to show those kind of existence of self-review threat is an issue. So you have to be a little more careful. The threats, possible threats of independence, email communications, how fearlessly we communicate with the client, what all things are communicated in the mail. Do they cross the limit of communication of an auditor? Do they travel to the domain of preparation of accounts or preparation of balance sheet, or suggesting the avoidance of tax, or or suggesting circumventing the compliance. You have to be very, very careful. These are areas where these documentations can prove that you have assisted or compromised on your independence. I hope you understood it. So we have got in volume 1, part 4A and part 4B. 4A deals with the independence of the professionals who are in service sector, and 4B deals with those in attestation service. Detailed guidance are given. Detailed guidance are not required. Conflict of interest, either as an investor or as a borrower or as someone who is overly dependent on the client, or as someone who is involved in the client as advisor, manager, KMP and all those things and still as an auditor, or someone who is a relative who is involved directly into it. All these are matters of common sense. You need to be a little alert, that's all. Most importantly, you have to ensure that the requirement of the auditing standards regarding independent satisfaction is completed. Audit documentation. We have SQC 1, the quality standard. It applies to the firm. Please remember, it is not an engagement standard, it is a quality standard. Those who are keeping track of matters must be aware that there is a huge fight between NFRA and Institute on the issue whether SQC is an engagement standard to be notified by the NFRA, whether they have power for that or not. Because Section 132 of the Companies Act that empowers NFRA to notify on accounting and audit standards are only about engagement standards. Accounting standards that are required for preparation of accounts and auditing standards that are required for complying with the engagement procedures. So the quality standard, SQC, that is how a firm maintains the quality and how a firm ensures that the partners and the staff members ensure the quality, is something else. But that is the document which requires you to comply with the independence requirement. Of course, it refers to SA 220, which is the standard that is to be complied with the engagement partner on the quality aspect. So this auditing, the engagement partner of a company, of an audit entity, must ensure that the quality standards put in place by the firm is implemented by him, and therefore he and his team members have satisfied the requirements of the independence. That is there. But most of the times, when someone examines the audit file, how did you satisfy the independence? How did you satisfy independence of your junior members? It's not on record. So again, appearance is what? The documentation has to be there. You have examined whether there is any conflict of interest so far as the member, EP or other people are concerned. Then only we can say that yes, this aspect has been complied with. So moving on from the fundamentals, I think already 1 hour I've spoken about the fundamental aspects of it. So now, respecting the time, let me move on to more important aspects. the volume 2 regulations. In volume 2, they have referred to certain sections of the CA Act, accounting standards, auditing standards, authority of those documents on the profession, and also the first and second schedule to the CA Act, plus a few guidelines. These are the regulations. Accounting standards, of course, wherever you are associated as a professional, complying with the accounting standards is a compulsion. Dealing with that subject requires more time. So, of course, I'm not going to delve into that. Auditing standard is another subject. For the purpose of company audit, it is compulsorily to be declared that I have complied with the auditing standard. Even in the other audits, since we are supposed to issue the audit report according to SA 700 or 705 or 706, you are supposed to comply with the other auditing standards, which is that is the authority given to the standards by the institute. So we are liable to comply with that. I'll touch the technicalities of it wherever it's necessary, otherwise I'll just move on. But the consequences of not complying with the regulations, the accounting standards, audit standard, or with the fundamental principles which I discussed here a while before, are what are dealt in the first and second schedule of the CA Act. Section 22 of the CA Act says that professional misconduct includes offenses listed in the first or second schedule to the CA Act. However, the powers of the directed discipline to investigate into any matters is not limited to the items in the first or second schedule. In other words, if the directed discipline of the institute, or for that matter, nowadays we have got another regulator for the listed entities, NFRA. So anything that I say, either the authority is NFRA or the authority is the direct discipline, depending on the kind of the client you have. They have got unlimited powers to investigate into any of the matters, regardless, prima facie, the allegation falls in one of the items of first schedule or second schedule. So it's a wide canvas. However, someone who alleges something must find some offense, so they would naturally reach in one of the clauses. That's a natural consequence. So let us examine what are those aspects that are listed in the Code of Ethics, where you will be held guilty of professional misconduct. Give me 1 second. I was looking for some water. Anyways, no problem. The first schedule has lighter offenses. Second schedule lists more serious offenses. Let me touch the first schedule offenses first. Part 1 of the first schedule, as a first item, deals with an offense that somebody is practicing as a chartered accountant, but he is not. So that generally doesn't happen. But even if you have it, it's unrelated to us. So forget it. Clause 2 and 3 deals with the sharing of the fees with non-chartered accountants. Clause 2 deals with giving, and clause 3 deals with taking. You are not supposed to share your fees with non-CA. This actually is only to cover the point that in order to get the job assignments, don't engage somebody to canvas job for you or to give commission. Don't have tie up with the accountants. These are the meaning of this. Fourth clause naturally is not a big issue. That is entering into partnership with a non-member. You are aware that there was a plan with the institute to have multi-professional partnership firms. The law was amended also, but that is not yet implemented because of other regulatory issues. So it's in limbo now. So this particular offense also has riders now. Clause 5, securing professional business through non-partner unlawful means. The word used is means that are not expected in the CA profession. No, means not open to CA profession. That's the correct word. Means not open to CA profession. The law has not defined it. This particular section has invited a lot of problems now to middle-sized firms in the country now. I can share that a little for 1 minute. The institute felt the need of opening up the scenario, the canvas of profession. And in 2005, certain networking guidelines were brought up. Exploring the opportunity within that, some partnership firms tied up with some other multinational accounting firms. But now there is a interpretation that this was not supposed to have been done with the multinationals. So tying up with persons or to means that are not open to CAs is always a debatable aspect. What is the possible tie-up? As of now, you can only have tie-up with other CA firms. On the record, you have tie-up with anybody else, whether it is a website platform, online service provider, or other consulting agencies. These days, social networking platforms have got so many avenues, but don't explore them. They would be dangerous. Clause 6 and clause 7 are closely related. Advertisement. All of you are aware that we are not allowed to advertise. You are not supposed to solicit clients. In fact, by soliciting clients, you will not get business, you will not prosper. The client has to come to you on his own. Otherwise, you won't be able to make money. You won't be able to make reputation for you. Institute categorically prohibits that. advertising guidelines are available. There is a special guideline which is in the code of ethics also. Of course, you can put your details in a telephone directory, in a specialist directory for chartered accountants alone, without making it extravagant or flashy. You can also create your own website, but the restrictions on the website are very harsh. You have to be very careful about that. Your visiting cards shall not be flashy. The other day I saw a person who's been held guilty for putting a photograph on the visiting card, which was inappropriate according to the ethics committee. So resorting into any act that would make you stand out as compared to others, to present you differently from others, to propagate you what you do, to project your services, expertise, clients, profile, fees, anything. All of them are coming under the category of solicitation or advertisement. Therefore, you have to be even careful about using the domain name. If the domain name that you use as part of your email address, if it is not of your firm, and if it is not of a prominent domain like a Yahoo or a Gmail or a Rediff, and if it happens to be of somebody who is a consultant or somebody else whose identity can be figured out as someone giving a different kind of or allied services, you both could be tagged as one, and the question that can come is whether there is any affiliation with them or not. So therefore, you have to be very careful about even the slightest, smallest of the things that you do to present yourself to the public. Clause 8 and 9. 8, failure to communicate with the outgoing auditor. 9, non-compliance of the provisions of Companies Act section 139 and 140. Now, let me tell you, there is an incorrect perception among the professionals that when you get an assignment, you need to get a no objection certificate from somebody else, the previous professional. It is the requirement is not no objection certificate. The requirement is to communicate with the previous auditor. The objective is to understand the circumstances under which you are appointed or under which he is going out. Is the client doing an auditor shopping or not? Or has the previous auditor left because there are situations for him not to continue as a true independent professional? Are there instances of dispute between these two because of professional reasons or monetary reasons? Does your undertaking the job lead to undercutting of the fees? Was the previous professional paid fully of the dues to him? All these are matters that are to be understood by you before undertaking the job, before accepting the assignment. More than that, learning about the client from an independent source is always going to enhance your ability to understand the job, the scope of job. So communication with the previous auditor is a very important aspect, and if it is not done, institute sees it very, very seriously. So far as the compliance with the Companies Act section 139 and 140 are concerned. Now here, unlike in the previous case, in the previous before 2020 amendment, we had only one section 225 referred in section clause 9. We dealt with the removal of auditor. So the importance of the provision was whether the special notice required to be issued for passing to be issued to the auditor before he is removed, or the reason for not appointing the auditor was let known to him, and whether he was given opportunity to explain matters, and whether proceedings have been completed properly according to Companies Act, and the appointment of a new auditor was in accordance with the law or not. So this assumed importance in the context of removal of auditor. But now the law has changed completely. Now they have brought in section 139 and 140 both. So 139 and 140 both means it deals not only with the removal of auditor, but every aspect of the appointment. Now the question is, how do you satisfy yourself before accepting the job whether the company has done the compliances according to section 139 or not? It's a complicated job because you have no access to the company's records. You have to accept the job. And you are asking them, show me your records first and then only I'll accept it. The requirement is very complicated. I think when the change was brought in the law, nobody applied their mind properly. But anyway, the reality is this. At least after accepting the job, you should see that the records are complete. If not, any objection coming up, it can create problems. I'll supplement this with an interesting development. NFRA has held many auditors guilty for not complying with the requirement of section 139, not satisfying the internal requirements, and held them guilty under clause 9. While they were branch auditors of a company. And imagine a branch auditor asking the company to provide them with the company's records before they accepting the branch auditor's job. It's all impractical. But the reality is this. The law in force does not factor the practical difficulties. And then when you do the job, you have to be aware about these practical issues. Someone can raise the issue, so you should have documents. Applying your mind would help you. You will be able to come out with the solutions. But if you have not applied your mind on the issue, then you will be caught unaware when somebody raises the issue after so many years. Clause 10 and clause 11 and clause 12 are not related to this. Charging fees based on the percentage or contingencies. Naturally, you are not supposed to charge fees consequent upon the results performed by you. And you can't engage in any other occupation. There are restrictions. You are aware about the council guidelines. There are jobs where you can do with the permission of the institute. And there are jobs that you cannot do at all. So remember, even if you are undertaking a job that you are permitted to, for example, a tutor or a part-time teacher, but you are not supposed to present that as a feature in your website or in a card or anywhere. You cannot advertise that because the advertisement guidelines have given the freedom only to present your profile as a practitioner without giving details of your other activities, like, for example, you are a director in a company, you are not supposed to disclose that. So friends, that's about the first schedule. And you must be aware that in first schedule, the offenses attract removal from membership for 3 months and a maximum penalty of 1 lakh rupees according to the institute norms. However, if a person is held guilty by NFRA, they do not discriminate between the offenses under first schedule and second schedule. So therefore, the punishment can be minimum one year debarment from corporate audit, 1 lakh fees, 1 lakh fine, 2, 10 years debarment, and 10 times of the fees you collect from your client. Heavy punishment. So those who are associated with the listed entities and large unlisted entities coming in the scope of NFRA to be very careful, more careful. That is not to say that others are not, because even removal from membership for 1 day takes away your all seniority. It's a break in service, and then when you restore your membership, it's a new beginning. The firm in which you are a partner loses all the points that they have secured. You being a partner in the CAG empanelment or any other empanelment, you'll be lost. And then when you rejoin, you have lost all those past track records. So therefore, so far as the implication of the removal from membership is concerned, even for 1 day, it is suicidal. And if it is for a longer period, it takes away your right to practice also, your right to life also, rather. So apart from the part 1 of a schedule, there are part 2 and part 3 that is relevant for members in service, and some general principles, like for example, don't claim yourself as a FCA if you are not an FCA. Don't always comply with the requirement of institute when they ask for any information. Don't give any false information in your advertisements, falling within scope of clause 6.7. Those are other aspects in the first schedule. Now moving on to the second schedule offenses. You cannot certify or issue a report without examining records. One of the basic things. It's a serious offense. So if you leave any evidences for a third party to demonstrate that you have not examined the records, an allegation can be raised that you have not examined records, then it can create problems. For instance, I'm giving an example, arbitrary example. Suppose a regulatory authority is passing an order asking your client to pay compensation to a third party. The amount of penalty determined by, or compensation determined by the authority was erroneous, because the base they used was erroneous. The client wants to go to the authority again with the rectification application and approaching chartered accountant to give a certificate to clarify the base. Chartered accountant is giving a certificate, correctly giving this should be the base. But on the face of the certificate, he has not written the reason for that base as the report of the first order of the authority. Now here, somebody who is affected by this particular certificate would say that, look at this certificate. He wants to give a certificate on a particular issue, and the very issue where it is recorded, that record has not been examined. So relevant record is not examined. So is it the case that the CA did not examine? He had examined, but he had not disclosed it in the certificate. So therefore, you have to be very careful in drafting your reports and certificates. It shall not give any evidence or any suspicion that you have not examined the records. Another one, permitting to use a name for vouching the accuracy of the future contingent earnings. We commit a mistake sometimes. The client is anxious to present future prospects to the banker, and he wants you to certify the projections. You oblige him. You cannot. It is contingent upon the performance of the future, and you are not allowed to do that. We are basically certifiers or reporters on the historical information. Next one, opines on financial statements where substantial interest involved. This directly is connected to the independent. Now let me clarify here. Here, the clause is opines on financial statement where substantial interest involved. So two things, it's about opinion on audited accounts, and they are talking about substantial interest. Substantial interest is defined as more than 20% stakeholding, whether it is in a partnership firm or in a company, and for you or your partner or the family relatives. The point is that if I don't have substantial interest, can I opine? Can I give a report? The answer is no. Because this particular regulatory provision in the Act is of 1949. Code of Ethics came into being subsequently. And the Code of Ethics, there is another provision in this very second schedule, not complying with the guidelines or the directives of the institute is an offense. Code of Ethics is a guideline. And that deals in detail about the independence. Anything that creates threat to independence is an offense. So therefore, you shall not give overdue importance to this particular clause. Although this clause is very categorical on the aspect of professional misconduct. Fails to disclose any material fact in financial statement. Clause 5 of the part 1 of the second schedule. Fails to disclose any material fact in financial statement. It is one of the commonest of the allegations against chartered accountants. Now we have schedule 3 now, balance sheet of the company. And its requirements are very detailed. We have a guidance note also on that. And it gives in detail the disclosures required, be it on the balance sheet or the profit loss account and all the notes. Now, when there is a requirement in the law, then naturally it will be material. Non-compliance of law is a material aspect, even if it's a small thing. So a quality review board or a financial reporting review board or a director discipline may say that this is a requirement of the law. You have not disclosed this aspect. So it's an offense. That time when you say it's a small thing, perhaps that may not go well. So disclosure on the financial statements according to the requirement of the performer, according to the requirement of the accounting standards, both. For example, AS 15, paragraph 120, employee benefits. Look at the disclosure requirements. Huge disclosure requirements. Unless you get an actuarial report, you will not be able to present that. An actuary will give all the details. You only need to just check it. But you must remember to ask the company to provide an actual report so that you can present it. Otherwise, it amounts to non-compliance of accounting standard, which is another violation of section 133 of the Companies Act also. Your audit report also is violated. So therefore, that's a disclosure. So disclosure of the requirements in accounting standards, as well as in Schedule 3, so far as the company is concerned, and accounting policy disclosure, be it a company or non-company, accounting standard 1 requires that. And accounting standard, other disclosures in the accounting standard also are very relevant for others also, other entities also. So therefore, clause 5 is a very serious and important one. When one is conscious of this particular offense or the possibility of an offense of this sort, one would be conscious to make a proper checklist. What are the things to be in my balance sheet? Be it as a disclosure of accounting standard or of the Schedule 3 or of the other format. In the case of an insurance balance sheet, the requirement is according to the IRD requirement. Now, the other point is clause 6 fails to report a known material misstatement appearing in financial statement. Now, there are 2 elements. It's talking about financial statement, balance sheet audited by you. Material misstatement, that means it has to be a misstatement and also material. And you have failed to report it. It's another common but very serious charges these days. Allegations are raised against chartered accountants of under provisioning, overbooking of incomes, understating of assets, liabilities, on multiple reasons. Lack of provisioning, not creating contingencies, errors in DTA, DGL calculations, tax provisions. Allegations can be anything. Another one is performing professional duties without due diligence, about which I highlighted in the fundamental principles. So clause 5, 6, 7, 8, 9, all of these are connected directly to the fundamental principle number 3, professional competence and due care. Due diligence is a matter, very subjective matter. Although the language of the clause talks about gross negligence or due diligence. So gross negligence, of course, must be of a higher degree. But due diligence, we cannot say that. Diligence means application of mind. So if somebody proves that you have failed to apply your mind, then you are on the wrong side of the law. Fails to obtain sufficient information for expressing an opinion. What does it mean? The whole of the auditing standards and their application come here. Just as I referred to accounting standard with reference to clause number 6 and 5, reference to auditing standards are dealt in clause number 8 and 9. Fails to obtain sufficient information for expressing an opinion. It's all about collecting information necessary for you to opine. It's not only for audit, it's also for certification. Remember, certification is not an opinion. It's an absolute assurance. Audit opinion is reasonable assurance. So in the case of absolute assurance, you need to be 100% sure about what you are certifying. In the audit report, of course, some leverage is there, flexibility is there. But yet, if you are not able to satisfy the authorities that you have obtained all what is necessary for you to do for doing this audit, then again you will be on the wrong side of the law. You have to appreciate one thing. These days, errors in the balance sheet is not a pre-requirement to hold you professionally guilty of negligence. Even if the balance sheet that you made is perfect, free of any errors and omissions, if you are not able to demonstrate that it was not an accident, it was just the result of good job by you, you fail to achieve that, then you cannot be comfortable. You cannot be confident that you will be free. Because obtaining sufficient information for expressing opinion does not mean that the opinion that you made was wrong. Not obtaining me, even if you have not obtained all information because your gut feeling, possibly your opinion could be correct. But the question is not that. Whether did you examine every aspect of the line items? Whether did you identify the risk of misstatement at the time of audit? Whether did you ask for audit evidences to examine the element of material misstatement with reference to every element you identified as having risk of material misstatement? And if you have done that, where is in the audit file that proves that you asked for the information, they provided the information, you examined it, you found it, and there is no error? Is there evidence in the audit file? If that is not there in the audit file, that means the audit process you did was flawed. You might have heard about instances where balance confirmations were not obtained and auditor is held guilty, although the balances were error-free. I don't agree with that kind of allegations because balance confirmation is after all an optional exercise. But still, what we are trying to explain is the procedural aspect. What they are emphasizing is a procedure that is necessary here was not complied. So auditor's guilt is not found with reference to the errors in the balance sheet. Auditor's guilt is found with reference to the procedural flaws also, not only based on the errors in the balance sheet, but also on procedural flaws. The clause 9 is also connected. Auditing standard fails to invite attention to any material departure from generally accepted procedure of audit. Generally accepted procedure of audit means what is written in the auditing standard. are there any material departure? If there are any material departure, why did you depart from the procedure laid out in the auditing standards? Have you communicated with the management of the company? Have you recorded it in the balance sheet, the audit file? Have you disclosed it as a limitation of the audit report? How significant it was? You have to satisfy. For example, you have not recorded the materiality aspect so far as the testing of the items involved in the expense are concerned. I'll explain again. You need to examine the expenses, the correctness or the material misstatement. Now, one way of telling your audit team is that test all items and give me the output of the ledger with proper examination remarks. Second, test these select items and set a criteria. Let us take a materiality of, say, 5% or 10%, or a sample of 50%. So now I attach two auditing standards: materiality that dealt in SA 320, sampling dealt in SA 530. Now, suppose there are no instructions in the audit file to audit team about audit sampling or the materiality to be applied while examining the individual expenses. If there is a note in the audit file that all the expenses were explained or examined and sampling based examination was not done, and therefore the requirement of SA 530 and SA 320 so far as the examination expense are concerned had no relevance, then it is fine. Then the audit procedure prescribed in the auditing standard, although it is not complied, it is not a material departure because it is a judgment, and the judgment is visible in the audit file. But if that is not marked in the audit file, then how would you answer to somebody who alleges that you did not comply with SA 320 and SA 530? And if he alleges that, so therefore you need not comply with section 143.9 and section 143.10 of the company law, and therefore your audit report is wrong, how would you satisfy him? So therefore, I just gave an example for that. These days, when allegations of not complying with auditing standards arise, chartered accountants scramble for the answers because in their audit file, proper documentation is not required, not present. That brings me to perhaps the last point, the audit file. I refer to audit file many times. SA 230 deals with audit file. Audit file in SA 230 is with reference to the audits. But if you're doing a compilation or a review or even a tax audit, in all situations, whatever process you are undertaking must be documented. And what is documented is your documentation, which is what is a file. So it could be audit file, it's an assignment file. SA 230 gives guidance. You are required to complete the audit process or the examination process, and within 60 days, since you signed, you need to make a comprehensive file which will have the very first communication regarding appointment, then the engagement letter that you are issuing according to SA 210, if it's an audit, or an adapted version if it is any other assignment. Then SA 220 compliance, the quality requirements and the team and the EP and who is having what kind of role and who is quality control reviewer, etc. Then the process requirements, 300 the planning, 315 the identification of risk of material misstatements, 330 the how to address the risk that you identified, 450 the compilation of material misstatement, 500 plus 500 audit evidence, 505 the balance confirmations. So there are about 30 or 31, I suppose. So you need to go by each and every requirement. Wherever a shall is written in the auditing standard, it's a mandatory thing. And the compliance aspect and the procedural result of that and the conclusions derived from there and how it was compiled by the auditor, when it was done by whom, during which all days, how it was concluded, how it was communicated to management in accordance with SA 260. And then how did you obtain the return representation? According to 560, I suppose. So, and how did you satisfy yourself about related party transactions, the MRLs? All these must be in your audit file. And the requirement of the SA 230 is this, that if a person who has no connection with the audit that you did, but he's a chartered accountant, if he goes by the file that you made, he must be able to understand the whole process and the way you reached that your decision from that file. This is the regulatory requirement today. Now, my friends who have listened to me, ask you as well, am I making such a file, audit file for my job? Do I have any such documentation for my job? Friends, I have tried to encapsulate the most of the things that are relevant in today's context in this 2-hour monologue. I don't know how much do you understand. And in 2 hours time, uninterrupted talking, naturally one would get tired. So we have got another 5 minutes time. If you have any other questions, I am done with my deliberations. And back to you, Mr. Jayant.
Sir, 1 second, sir. Jain sir
Hello,
is...
yeah, sir. Sir, so any other doubts now? So the floor is open for doubts.
There are 4 minutes left.
Yeah. So if there are no further doubts, like we can close the session, sir.
Thank you so much.
Yeah, thank you very much for joining us, sir, virtually. Meantime, we'll invite you physically. Thank you. Thank you for sharing your knowledge, sir.
Thank you so much. Bye.
Yeah, signing off for the session. Thank you. Good night.
Bye.
Bye.
You can close it now.
Yeah.